All right, good afternoon. Welcome to the weekly take on the market. Today is Friday, June 9th. It's about 2 o'clock Pacific time. Market is closed for the day. I will be your host. My name is Scott St. Clair. I'm manager of the Premium Product Group here at Investors Business Daily. Please take a moment to read the disclaimer. I'm not licensed. I can't tell you what to buy, sell, hold. These webinars are vetted for compliance, so we can speak a little bit more freely on them, but we're not allowed to give financial advice. All right, so we'll do market thoughts, the routine, same stuff. That's same kind of process that we've been using for at least a few years now. And I have a few things since I wasn't here, so I didn't do a video last week. I think this came out today or maybe yesterday, but as individual investors, the AAII, so Association of Individual Investors, I think it's that, American maybe. It's anyways, they finally gotten bullish. They just couldn't stand it anymore. Now, just because they got bullish doesn't mean it's bearish. It doesn't quite work that way. If it was the other way, like let's say all of a sudden they got really bearish, then I would think that the sell-off, if we were selling off, would be close to ending. But this isn't as good an indicator to the upside. But it can give you some thoughts, as far as maybe pausing or we could go through a digestion period or consolidation because it's finally getting more obvious to everyone that the market is going up. I saw a guy today on a YouTube video I was watching. He says, "I hate the market, but I'm invested." And that seems to be everybody's sentiment. I don't know why. I don't know why everyone hates the market, but they do. But they also know that, you know what, the price action is pretty bullish. So maybe I've got to be invested. We're at extreme greed on the fear and greed index. I don't look at this that often. Somehow this came across my Twitter feed, and it's not something I look at all that often. So let's see how that works out. Again, I'm not a big fan of sentiment indicators that are too bullish, telling you that the rally or the bull market is over. It doesn't work as well that way, at least in my experience. Keep that in mind. And this is a great tweet. FOMO is sending traders back into a stock market that many say they hate. So it's an unloved market, and my experience is unloved markets go higher, kind of drags them in. We'll see. I'm kind of in everybody else's camp too. I'm in the market, but I'm not pedal to the metal. I'm not even fully invested in my cash accounts. And I know Jim Ropel was on IBD Live Wednesday, I think, and was really fired up that we could possibly be starting a new bull market, but he was 50% invested. So it's kind of a dichotomy that we all face. I'd like to see the market digest these gains and then start to leg up. I'd love to see some type of scare, pullback, something that scares the market for a day or two or three, and then see how the market reacts to that. Now, next week, we might get that because I think there's a CPI number on Tuesday. There's a Fed meeting on Wednesday. There's like a lot of stuff next week that maybe could shake the tree. So that would be perfect. I'd love to see a little pullback. We had the start of one on Wednesday, and I'll pull it up on the NASDAQ, but it just couldn't even go down for more than a day. And that's the problem. It's hard to get invested if it can't go down for more than a day. All right, so it is very top heavy. Meta, Amazon, Apple, etc. are up 53% for the year as of June. The S&P is up 11. The remaining 493 companies are flat. They call it the Magnificent Seven. If you've studied history, they had the Nifty 50, which ended in tears. It probably does end in tears. Is that 5-10 years from now, or 5-10 months from now, or 5-10 weeks from now? I don't know. Everything seems to end in tears, right? The average winner almost always goes down 70% at some point on average. So, but it's from where, from what point? And so that's the thing you have to understand. And if you have sell rules, I don't see it being a problem if you buy something wrong, you have the sell rule to bail you out. And when I say wrong, I just mean it went against you or something like that. Or even if you just get tired of watching Nvidia go up or Tesla go up and you just buy it just because, as long as you honor your stop loss, it's really difficult for you to get hurt. You can lose, but you can't get hurt. That's what's so great about the sell rules, having some type of protection, some stop loss on either the capital that you've used for that purchase or like your overall account. You might want to use a stop loss of 5 or 10% off the highs on your overall account. Like if you go down 10% off your highs in your overall account, maybe you have to reduce your exposure 25%. You go down 15, you have to reduce it to another 25% or something, right? So that you're always kind of within shouting distance of all-time highs on your equity curve. Okay, so there's a lot of talk of bubbles, and only history will know for sure if Nvidia or Tesla or any of these turn out to be a bubble. What will happen is the stocks will top and they'll go down, they'll stay down. So this is the South Sea bubble. This is a chart of the South Sea bubble. It went from basically nil to 130-ish or something like that. So let's say it was 10 to 130. So it went up 13-fold. So that's the issue with calling something like Nvidia or that a bubble. Is you might be right, but you'll get run over if you try to go the other way, or if you want to participate, have a sell rule. So if you bought London Assurance in 1720, if you bought it breaking out of that base at 60, it looked awfully high there. It ran to 80. Then it based again. If you bought it at 80, it looked awfully high there. And it ran to 125, 130 or whatever. If you couldn't stand it and bought it at 125 and had no sell rule, that's how you get hurt, because you allow something to go down a lot. If you have something that's 10% of your portfolio and it goes down 70%, your overall portfolio is going to go down 7%. That's barring all other securities you own as being flat. So there's I think this was from Jason Zweig in the Wall Street Journal. I think that's where I got that chart. It's been a couple of weeks. I apologize. I forgot that I placed this here. I'm pretty certain it was a Zweig article in the journal. And talked about loss aversion. So many of the people who ended up owning London Assurance shares the longest were the hodlers. They were those who paid the highest prices and incurred the deepest losses. So the more you were underwater on the stock, the more likely you were to hodl, hold on for dear life, right? And not sell. The closer to the peak that people bought the stock, the more likely they were to end up holding it or hodling it. How much they lost determined how long they clung to the shares. So you don't want to dig yourself too deep a hole, because there's like a point where the pain, it's too much, like the loss is too much to take. And at some point, like if you don't take 10% as a stop loss, at 12, at 14, at 16, at 18, you just like avoid it. You have loss aversion. But based on history, at some point, it's different for different people, 20, 25, 30, 40, 60. At some point, the pain gets too great and you just get rid of it. And it takes a long time for that to happen. So most of the people who lost big in this bubble were the buyers at the top. Now, you might say, well, why were they buying at 80, 100, 120, 130? Easy to say that's where it stopped. Qualcomm and Taser and some of these things can go up for a long, long time. So have a stop loss plan and honor your stop loss. That's the other thing. You definitely want to honor it. All right, let's jump into the markets, the indexes. So here's the NASDAQ, and and yesterday or Wednesday, I should say, it looks like nothing on the chart, but it was kind of a nasty reversal. I think it on the open, roughly within half hour, I was up like 3.5%. And by the end of the day, I was down like 1%, but I had done some selling on some things that felt a little stretched, like SMCI. And so I did the math. If I hadn't done any selling, I would have gone from up 3.5 to down 3.5, which is really hard for me to stomach. That's 7% move in a single day. And you're in these high beta stocks, that's kind of what can happen, which is why I like to take some off when the going is good, just from a psychological standpoint. It was no fun to go backwards like that, but I today or yesterday, Thursday and Friday, you get back a little bit of that and then some, and so I can withstand the pain, and that's just kind of how I do it. But it's a tough market. We're in a bull market, I think. I know some people don't like to hear that. I get the emails, but I just don't know how you look at this chart and say that this is not in a bull market, the index. Now, the index is very clustered. And so if that bothers you and you don't want to participate, so be it. If you're running your own money, you can sit in T-bills or bonds and make 4 or 5%. And at least you get that versus 4 or 5 years ago, you'd have got zilch basically. So I think that the market can pull back here, and I actually kind of hope it does. I'm looking forward to enduring a pullback. I want to see how NVIDIA, how SMCI, how IoT. Guys, there's so many names that are interesting to me. I want to see how they react to a day or two or three of pressure on the markets. Let's go to the S&P. So try to come out of this low area and give back most of the gains, still finish positive. Not as strong as the NASDAQ. I think everybody knows that. The Russell, though, starting to come up off the right side. It's building this cup. Very interesting. So I would go from, it was bearish a couple of weeks ago to neutral. I would say neutral. I wouldn't get all pulled up on it just yet. Let's look at the weekly. It's basically right on the moving average, the 40-week. So it doesn't look terrible. It doesn't look great. The jury's still out on IWM. I think like Japan is in a bull market. Now you can ignore this this gap that was a distribution, but it came out of this flat base, and it's up 12% in 39 days out of that flat base. VPL looks interesting, which is Pacific Index. Tried to come out of this cup of the handle, nice little shakeout, and then came back really strong. So that looks interesting to me. So that there's a couple of other things that you could be invested in if you'd like. Let's jump to the industry groups. So computer software education is still number one. Let me turn off my my camera so you can see, hopefully the chart's better. Computer hardware peripheral is number two. Internet content, 3. Home builders, another strong area. It's kind of caught everybody off guard. 4. Computer software enterprises, computer software database. So we're starting to get semis, fabless equipment. There's a lot of good areas, I think, growthy type areas to search for merchandise. I think the industry groups look fine. And not a whole lot there. Stocks, I mentioned IoT. Let's go to that one. Now, a bit of a reversal today. And as a short-term trader, I would be taking some off. I think it's 37% in about 5 days is a lot. But that's not including the gap. So, but interesting, new name, good group. Now, maybe it's the start of a new bull market, and the stock's up 37% in the start of a new bull market. That's a leadership. Fast forward 9 months, 18 months from now, could be a lot higher. I don't know. I don't know much about this company, but it looks interesting to me. Intest, INTT, another newer, smaller name. Not really a great buy point right there, but something. You can see it's up 155%, and their last quarterly have good earnings and sales. Weekly, kind of a newer name. Let's go to the monthly. Okay, so not super new. Did go public in the mid 90s, but this is all-time high on a monthly chart. So another newer name that's acting really well. What's the group? Electronic products. I think VRT is in this group. Oh, power equipment. So this is another one that looks very interesting to me. I don't own IoT any longer, and I do not own INTT. I do own VRT. Comes out of this cup. You've got 1, 2, 3, 4, 5, 6, 7 weeks in a row up. Very powerful action. Could it consolidate? For sure. But 7 weeks in a row is steady accumulation. See how it gaps up and holds, and then just kind of stair steps higher. Last quarter earnings up 400%. And, they've made power equipment for data centers, which is this whole AI thing. If the AI boom is real, the stock could go a long way. That's why I'm trying to hold on to it. SMCI, which is, probably the best AI stock, is just a powerhouse, a great one to study. If I put the index line across the top, you can see so that we've got this correction in the market, so it corrects as well. Market tries to go up, it makes a new high. Look at this though. Look at how the market can't make a new high, but SMCI did. Then you get a little correction, and SMCI corrected 28%. Market makes a bit of a high right there, and SMCI makes a better high as well. And eventually the lid of the market is pulled off, and SMCI just goes crazy. But look at the RS line, and new high there, new high there, new high there. It's just screaming at you. Now, it wasn't easy to buy, but I know there's a couple of people that I know that know this company and have owned it. Just they're better at sitting than me and have owned it really well. So super extended, like, I don't know, this is tough. It's like very climactic action, but if it's the beginning of something, this could go a long way because the action is so strong. So that's the hard part. If I know it's crazy, and bear with me here. It's kind of no, obviously, Scott, Captain Obvious is what I was trying to say. But if you go and study Qualcomm and some of those big winners, Ascend, they go up and then they pull back, and they go up and they pull back, and they go up like 10, 12 fold. So I don't know how much SMCI is up. Let's just count from, say, 40. So it's up, 5-fold or so, maybe a little bit more. So if this is real, you have a chance. Now, somewhere along the way, they will catch up, and you'll get a chance to buy it off the 50-day or 10-week, or it'll build a base, or 3 weeks tied, or something like that. But this is definitely one to watch, because of if the AI thing is real, if this is one of those companies that's kind of at the forefront. NVIDIA, an obvious one. I don't know if it's going to show up, but I would think it would. So you've got 1%, and then you've got 1.42%. So this is definitely, in my book, 3 weeks tight. So you get stuck, breaks out, 8-week hold rule triggers, continues, runs up. It's a bubble, it's extended, it's overvalued, and yet goes 3 weeks tight. I do own NVIDIA. I do own it as my biggest position. Now, it's not a big position anymore because I want to try to, manage it. And it's hard. It jumps around, relative wise, point wise. I mean, it's a $400 stock roughly. So you have to kind of get used to the amount of points it'll move around. But that is, I call me crazy, but super bullish action, 3 weeks tight. I don't know if it's this week, next week, or 5 weeks from now, but I can see myself getting a lot heavier in NVIDIA. If you get something like that, that would be ideal. I don't know if I'm going to get that, but that would be ideal. Tesla. So breaks out of this space, number of weeks up in a row. Somebody was telling me about the ants, 12 or 15 days on Tesla, a friend of mine. So 2, 4, 6, 10, 12, 14, 16, 18. Looks like it's up about 16 of 18 days. A little bit short term, climactic. Yeah, the news today, and you've got a bit of a reversal here, but acting really good. So there's a lot of stuff out there that's acting pretty good. And I don't know. It's gonna be an interesting to fast forward 6-9 months from now and see how this plays out. That's for sure. All right, so let's go to the quote of the week. And I think I've got 2 quotes. Yeah. So Kieran Goodwin, Panning Capital Management, on a podcast. I'm a big believer it's more important to be on the right wave than necessarily be the best surfer. The wave is more important. So I don't have to be the best trader. I don't have to be the best stock analyst. I don't have to be the smartest guy in the room. I just got to find the right wave and hold on for dear life. And I don't know if this AI thing is the right wave, but it has the potential, right? It has the potential. So I'm going to risk a little to try to make a lot. And you just have to do that. And some of them fizzle. The cannabis wave fizzled. What else? Somebody else was telling me a bunch of the 3D printing that fizzled. That didn't work. What are some of the more recent kind of for lack of a better word, fads that we've had? Cannabis, 3D printing. There was a software service that did pretty well, although as a long-term holder, they all came back pretty good. But there was a time where that was really strong, and now you've got AI. So I think it might be the wave. So the wave is more important. We'll have to wait and see. And then obviously I wanted to have a quote in honor of Bill O'Neill. Most of you, I'm sure, had heard that Bill has passed. And so I could fill a sheet of some of my favorite quotes from Bill O'Neill, like, stock's not going to double or triple because of the chart, right? It's the earnings, the sales, the group, the products and services. So NVIDIA is not going to double or triple because it's 3 weeks tight. It's all those other things that are the most important. And this one I really love because it's only risky if you don't have any rules. So I think it was Wendy Bosch, who was a former portfolio manager at William O'Neill, at one of the master's programs, said she told Bill, I'm a little uncomfortable talking about concentrated positions and using margin with everybody in this. She was making a presentation, and she said, before I gave the presentation, I talked to Bill and said, I'm a little uncomfortable about talking about margin and the type of concentration that we use at William O'Neill and Company. It's just not, it's a little different. Believe me, it's a little different than even than Wall Street for sure, but even the some of the other concentrated shops, they really can put pedal to the metal in the right names. And Bill told her, she's like talking about margin and I hate for these people to get hurt and it's risky. And Bill said, you're right. It's risky, but it's only risky if you do not have any rules. So if you buy SMCI here, it's hugely risky if you don't have a sell rule. You buy NVIDIA here, it's hugely risky if you don't have a sell rule. You buy anything here, it's risky if you don't have a sell rule. So having rules allows you to take risk, to put risk on and know where you're wrong. So you have a rule and you have to honor the rule. It's a two-step process for sure. Okay. Marcus Smith at investors.com, 800-424-9033. Tomorrow, Saturday, we have an event, like a training session event, 1 o'clock Pacific time, 4 o'clock Eastern. You're welcome to join. Hopefully, if that sounds interesting to you at all, you did get an email with information on it. If you know Marcus Smith inside and out, then you're fine. You don't need to join. It's more to kind of give people a more thorough training on how to use Marcus Smith, some of my favorite features, etc. Have a great week, everybody. Thank you. Bye-bye.